So as an asset manager, you're looking around and saying, where can I hide? Where can I at least break even? And there's one major compartment of a traditional portfolio that has effectively been break even this year. It's gold.
You're seeing an interesting dynamic happening with gold versus pretty much all other markets. Can you expand on that?
Sure. First off, pardon me for touting MSA, Momentum Structural Analysis, but we've had a very good year in terms of calls. In January, we called a major top in the NASDAQ 100, which is the leader index. After all, it definitely swept to the upside. Well, for example, between 2009 and 2021, it went up 16-fold. The S&P went up 7-fold. Okay, NASDAQ peaked by our metrics in January. S&P gave its sell signal in February. Okay, now, since then, we've had a major decline in the stock market. Like you said, the worst in 50 years for the first 2 quarters of a year. During that same time, we also called the drop in muni bonds. Again, these are traditional portfolio compartments, muni bonds and high yield corporate debt. They both collapsed. We're at now levels on the muni bonds and high yield corporate bonds where if you look at a monthly close, the only lows that we've got lower are 2009. Okay, so they've been collapsing even more than the stock market. So all your paper assets, the traditional portfolio compartments, have been decimated. There's been no alternative within them to go hide. Even U.S. Treasury bonds, which we now think are in a rally mode, by the way, have been a disastrous place to be this year. So as an asset manager, you're looking around and saying, where can I hide? Where can I at least break even? And there's one major compartment of a traditional portfolio that has effectively been break even this year. It's gold. Right now, we're trading down about 0.5% on the year. And that's in the sell-off. Okay. Now, so when you look at that context of this asset, that, and so where do I hide? Where is the safe place to be? Why is it that gold isn't collapsing with the stock market, as it, quote, supposed to do? Remember, that's the popular wisdom. How come it's down in the year only 1 or 2% at its maximum and it keeps getting corked back up? You know, is it being manipulated? I made a joke today in a report that if somebody is buying gold every time it gets down 1 or 2% on the year, regardless of the broader horizon of these other assets. Why? And I think the reason is that there's some asset managers out there, large ones. So Ray Dalio is an example, and there's others, who doubt the validity of the underlying value of the money unit. They know that the central banks are in an ongoing process of destroying the underlying value of the money units in order to support paper assets. And they finally come to that recognition that that's the real source of inflation. And they want to be in something that will hold its value. And they know that gold is one of those arenas. The problem is, and this has been a bit confusing to us and major confusing to most investors, while gold is held steady, silver has taken out the reaction lows of the last 2 years, which were all around 21.5, 21.5, 21.5, 3 different times between this September of 2020 and late 2021. It took it out in May by getting down to the 20 area, and then today got down to under 1950. So on a price chart, you look at silver and say, my goodness, what's going on here? And you contrast it with gold, which is not collapsing. Its lows of the last 2 years were in the 1670s. Right now we're trading above 1810. You know, why the disparity? And then when you look at the gold and silver miners, you know, whether you're looking at the ETFs like GDX and so forth, they did what silver did, which is to say, if you looked at a price chart after the big surge in summer of 2020, there were repeated reaction lows, for example, on GDX, popular ETF, down in the under 29 bucks, under 29, under 29, under 29. Finally, we blew that out and got down to 27. Right now, we're pushing back up to mid 28s. How come gold miners did that on the downside, took out the lows of the last 2 years, marginally, but took them out? And it had a serious drop since March just to get there. You know, it's painful. and silver do the same. And yet gold's sitting up there in the middle of the range of the last 2 years, picking its teeth. What's going on here? Which is right? Is gold the mama, or is the mama stupid and is going to join the miners in the silver market? Well, it's a big choice, because if the answer is, as we suspect, that the pullback in gold since that March spike high, which was unfortunately largely war-based, but the pullback is held around unchanged on the year. So that's the important point. Is that pullback in gold about over? And we're seeing evidence that if they don't beat the heck out of it this month, especially probably in the next week or two, they're not going to. In which case, you're looking at silver and gold miners as vastly undervalued on a historic basis relative to the price of gold. In which case, they're going to snap back, and the percent snapback just to get back to sort of fair value would be enormous percent gains for them. So that's a situation that in MSA we're focused on and providing our subscribers with specific timing on that issue. But I think right now, on a percentage basis, that's the pivotal area to be watching for both rapid turnaround in a given market and to largely the beginning of a sustained return to the upside, which gold never left. Gold never went into the downside. It just went to sleep. So that's a very interesting situation that we think investors should be paying attention to.